Good morning, everybody. It is 8:47 a.m., January 4th, and we are back for another market open. Today's going to be an interesting one. We've had 2 consecutive days of a red market, and, it's not been the most red of a market, but it has indeed been a market that is red to an extent. And as a result of that, it's been a very interesting time just to see kind of the price action we're having and things that are going on. Today's a little bit different because after you tend to have a little bit of a sell-off, at least what I've seen in the markets is that you have a little bit of a recovery as well. And the markets don't, continuously go up, just like they don't continuously go down. For the past 2 days, we have been down more than up. And so today we're green in the pre-markets. And it's going to be really interesting to kind of see how this market opens going into 9:30 a.m. We have new jobs data. We got the JOLTS data yesterday that was actually very aligned, and it supported this Goldilocks narrative that we've been talking about decreasing inflation but increasing growth. We got new data today outside of the JOLTS data, which were private payrolls. So we're going to talk about that. That also seems to be not the worst thing for the markets. I mean, the markets are actually like, yeah, this is good news. Primarily because U.S. private businesses added more jobs than expected, which again supports this Goldilocks narrative that growth is being maintained while inflation is coming down. So we're going to talk about that. Markets in general are up. We're going to talk about Bitcoin making a recovery to around 43,500, even though yesterday it fell. We're going to talk about that continued ETF approval and what that means for a lot of these Bitcoin-oriented companies. And in general, markets are up. The Bitcoin miners are up about 3% in the pre-markets. S&P up about 0.33 or 0.03%. Tech is doing well in the pre-markets. Verizon up 39.61. Palantir up 0.19%. So a lot to talk about, a lot to get into. And we will discuss where on the third trading day of 2024 is this macro going. Mr. Seymour Duck, Sethy Roth, Inbound, Alex, Brent, Broccoli Bob, Monty, Isho Sad, Missy Iger, Jeremy, Finance 401, otherwise known as Adam. What's up? How you doing? Jason, Wynn, Drew, Edmund, Rockin', Ronnie, Tabor, Ice Fishing, Mr. John Kaiser, who says, I'm naked. Well, I'm glad you're enjoying the market. I'm glad you're watching me while you're naked. Art of War, Babcock, Felicia, Mr. Seymour Duck, Joel, Jared, Roy, David, Sundown, Sam, Alex, 808s, Kaios, Joseph Villegas, Kim, Kevin Benjamins. All right, let's get into it. AJ, Billy. Billy says, I'm here now. We can start the show. Good morning. Billy, you're just in time because now that you're here, we can start the show. All right, so I think let's start off with the jobs report because this was actually the most important data I believe we got this morning. It's actually why the market's not super green or anything like that, but the market's definitely not red. Segments of it, of course, are red, but it's not red to the point where you would be afraid that we're going into a third day of it being red. Now, granted, 9:30 that can change. Of course, 9:30 that can change, but so far this jobs data is good. Also, we talked about Walgreens. Walgreens had earnings today or something. I did not. Yeah. Did anyone know Walgreens was posting earnings today? that was not on my wild card today, that Walgreens is getting earnings. But they did something that really made investors upset. Let me check their stock real quick. Walgreens is down 0.31%. Yeah, and there's a reason why they're down. Okay, so first let's talk about the jobs report. Okay, so private payrolls in the United States of America added 164,000 jobs in December. This is higher than 101,000 in November, and it's way better than the 130,000 estimate that the market was pricing in. That's pretty damn good. I mean, like, these reports are always revised, usually by the end of Friday or the upcoming Friday. They change them based on other governmental reports that come in, but so far, I mean, when you have a margin of safety of 30,000, 34,000, then you are probably definitely going to beat in terms of this job report, even if the numbers are revised down a little bit. A rebound in leisure and hospitality led the way as the sector added 59,000 jobs, and the pace of earnings growth deaccelerated again, with those staying in their jobs seeing annual pay increases of 5.4%. Private payrolls increased 164,000 for the month. Construction contributed 24,000 to the total. We know that because we know there's a little bit of a housing supply shock, and so there's going to be more jobs in the housing sector, while the other services categories, which includes dry cleaning, other support businesses, added 22,000. Financial activities included increased by 18,000. The pace of earnings growth deaccelerated, with those staying in their jobs seeing annual pay increases of 5.4%, while job changers saw increases of 8%. This is actually a good thing. You don't want people having massive levels of inflation in terms of their wages. So you see employers earning about 8% more in terms of growth, while employees are earning 5% more, which means that delta gives the employers a little bit of room to work with. And at the end of the day, you're not seeing people lose their jobs at massive levels of scale, which means 164,000 more jobs just means more people. The consumer continues to be strong. ADP chief economist said, we're returning to a labor market that's very much aligned with pre-pandemic hiring. While wages didn't drive the recent bout of inflation, now that pay growth has retreated, any risk of a wage price spiral has all but disappeared. I mean, that's really good news, folks. That is really, really, really good news. Let me read that again. While wages didn't drive the recent bout of inflation, now that pay growth has retreated, any risk of a wage price spiral has all but disappeared. Remember, the wage price spiral is McDonald's has to pay you $20 an hour because Burger King's paying you 15, and then Burger King's going to pay you 25, and then McDonald's pay you 30, right? There's so much competition between employers for that labor that it spirals those wages, and then the employee, quote unquote, ends up winning. But if they lose their purchasing power because we have massive levels of inflation because we're getting paid way too much to work, there is such a thing as, you're getting paid too much. Then that's obviously not good from a macroeconomic perspective. From a size perspective, companies with fewer than 50,000 employees led with 74,000 new jobs. Geographically, the West saw an increase of 109,000. That's near the California, Oregon, Washington area, while the Northeast added 94,000 jobs. This is really good. This is a really good report. And again, why is this such a good report? Because at the end of the day, if we are able to increase jobs, and we did it above 34,000 on expectations, while we are at the same time decreasing inflation, we win. Like, that Breaking Bad meme where Walter, spoiler alert for anybody who hasn't watched it, you can just go silent for like 10 seconds. 3, 2, 1. Okay, so when Walter kills Gus, right? And he and no one knows how he killed Gus. Like, everyone's confused, but it's on the news. And then his wife calls him. He's like, Walt, like, how did this happen? Blah, blah, blah. And then he's just kind of silent. And then Walt was like, and then Skylar's like, his wife is like, did you do this? And then he's just like, I won. And he hangs up the phone. That's kind of, I think, what Jerome Powell's feeling like, at least to an extent, on this jobs report. Like, because we should not be adding these many jobs and still having inflation where the way it is. Now, if we get the January CPI and inflation is going back through the roof, then obviously this jobs report will actually be incredibly bearish for the stock market, at least, and for inflation, because that means we added too many jobs. But so far, it seems like there's enough lagging indicators in these CPI reports that are going to show that inflation is actually coming down pretty dramatically while growth is not being compromised. And because growth is not being compromised, that is, the reason for why we are winning right now in regards to the battle on inflation and the battle on growth. And again, that is that Goldilocks zone that is so hard to be in. The JOLTS report that we had yesterday, this came out a little bit after the market opened, so let me talk about it right now. We have 8.79 million jobs that are currently opening, down from 8.85 million jobs that are open. So we have 60,000 less jobs that are open. For every person that is unemployed in America, we have 1.4 jobs available, whereas 3 months ago, we had 1.8 jobs available. This is the lowest number of job openings since March of 2021. So that is also indicating, well, wait a second. All right, we are getting to these levels that we had before the pandemic in terms of the number of people employed and the sort of wages that they're getting, but it's not being compromised just because we have to sacrifice. We have to get rid of inflation. So the Fed's quantitative tightening and higher interest rates are not compromising jobs. Why are they doing that? To get rid of inflation. And you would argue that we need to have less jobs in order to have less inflation. But now the economy is turning to a point where it's actually good news if we have more jobs, because it's showing that the consumer is resilient. And if the consumer is resilient, that is actually keeping the expectations higher for the stock market, because the consumer has to be resilient in order for us to get to these 5,200, 5,300 levels that people have on the stock market. Philip Rizzo says, I just want to see Amit win. TJ said this. Yeah, for those that tuned into the podcast with me and TJ, it's once every week. It's going to be on Tuesdays, and it's going to particularly be on options. We got a lot of good feedback. It seems like a lot of people enjoyed it. So shout out to everyone who checked out that pod. I think you guys enjoyed it. It's on the channel if you just click live on YouTube. And if you know nothing about options, we are going to take it step by step, quite frankly, because I'm also the same and I need to learn this stuff like from someone who actually knows this stuff. TJ manages $10 million. He actually understands this stuff. He's not, the most perfect stock picker, but he's made a shit ton of money in the markets, particularly via the option strategy, the wheel strategy. And if you are new to options or want to get any If you want to be talked to as a third grader when it comes to options over the coming weeks, that's what that podcast is for. And so, but it's also incredibly valuable just in terms of the real examples we're using. I think a lot of people would benefit from it. So if you want to check that out, that is on the channel as well. Good morning, Victor Hernandez. Good morning, John. Thank you for being here. All right, so that was the news on the jobs report. If you're just joining, the United States added 167,000 jobs, 34,000 above expectations, defying what the market thought we would do, which is why the market is pretty bullish on the state of the consumer. And again, the reason this is really important is because the conventional narrative just 3 months ago was that we need to have higher unemployment to get rid of inflation. That is not the narrative anymore. That is not the narrative anymore. The narrative anymore is not that we need less a number of jobs in order to combat inflation. The narrative now is that if we have 4.1% unemployment, that's going to be okay. And inflation will still come down, and that we shouldn't get massive levels of unemployment because that means something's going to break in the economy. So now we're trying to legitimately have that Goldilocks zone of, can we have a decent unemployment without having massive unemployment while we decrease inflation so that we don't have the consumer falling into some spiral, and then we have to lower interest rates for the wrong reason. The reason we should be lowering interest rates should be because we need to get rid of inflation, or because inflation is getting rid of, like it's coming down, versus we need to like do something to re-stimulate the economy because that means something is breaking. So overall, jobs report was really good. Jobs report was very, very good. Douglas says, do you think the red days we had were just due to bad reactions to green days, New Year's performance? Yes. In my opinion, yes. I do. And I've been pretty public about this for the past couple of days. I do not think the red days we've seen have been any, unique form of a reaction to things that have actually happened in the stock market. Like, I don't think the red days we had were based on any sort of news. I mean, because I study the news every day. There's no news that came out that was bad. Jobs report wasn't bad yesterday. Mortgage applications, people are trying to make that a bearish case, but that's not really a bearish case. House prices need to normalize, so it's okay if mortgage applications are not at the highest levels they need to be. There's nothing that no companies that have ridiculous earnings that would. It's like nothing happened the past couple of days other than people being like, oh, I don't want to pay taxes in January or in 2023. I'm going to pay taxes in 2025. So let me just sell right now. So I really do think a lot of the selling was based on that. Now, does that mean the market could go lower? Sure, of course, because people could continue to take their profits. But I don't really think it's so frothy to the point where we need to be so scared of where the market's going right now. That doesn't mean this is a super big buying opportunity. There could be a better dip or a better buying opportunity. But I definitely don't think there's some unique reason for why we needed to have a massive sell-off. Okay, let's talk about Walgreens. Let's talk about Walgreens. Nemo says, Amit, your normal voice is back. Is it because I was sick over the past week? Because if that's the case, then yeah, then my normal voice is indeed back. Okay, Walgreens did something really weird. Walgreens, by the way, I have a lot of affection towards Walgreens because when I lived in apartments while I was growing up, we had a Walgreens that literally was walking distance. Like everyone in those apartments walked near Walgreens. So I have been in Walgreens probably a couple thousand times in my life. I mean, I've gone to this pharmacy / convenience store is what I call it, like many, many times in my life. But I never bought their stock. And they posted earnings today. They beat on earnings, but they slashed the quarterly dividend in half. This is the first time Walgreens has slashed the dividend in 48 years. I mean, it's a long time. Maybe I'm getting this number wrong because they slashed the dividend to 25 cents from 48 cents. Maybe it's not 48 years. Maybe I got that number wrong there. But it's been a while since they slashed the dividend. So I don't know if it's 48 years. It would be kind of crazy if it was 48 years. But the retail pharmacy giant slashes dividend to 25 cents from 48 cents per share to strengthen its long-term balance sheet and cash position. In terms of the actual numbers, earnings per share, 66 cents versus 61 cents. That was good. Revenue, $36.71 billion versus $34.86 billion. Net loss of $67 million. So they are better than what they lost before. I think they lost like $114 million last quarter. $36 billion versus $34 billion, which is kind of insane, dude. You're doing $36 billion in revenue and you're losing $67 million. I mean, it just goes to show, how much of a CapEx heavy business Walgreens is. And this is why people bet on tech companies. This is why because in tech companies, you have fixed costs and then you have theoretically unlimited margin, right? I mean, I know there is an operating margin, but like your profit can become unlimited after your fixed costs, and you just have to keep growing the business. And with tech companies, it's actually easier to grow the business because it's a tech company versus something like a Walgreens that has to pay for all these stores and all the cost of goods, and the pharmacy business is not really the best. I mean, dude, to lose 67 million is just insane here when you make 36.71 billion. So overall, not a horrible earnings, but again, that dividend being slashed has not necessarily been liked by the market. So here we go on Walgreens. Walgreens 25.57 right now, down about 2% in the pre-market. It was down 4% yesterday. Walgreens, you would think, would be up yesterday because a lot of the dividend names got some momentum. You're talking about your Pfizer, your Verizon, your Dollar General. These value-oriented stocks got some rotation from growth, but Walgreens didn't. And Walgreens is supposed to be a little bit more of a value play, but that's not really happening right now. If we look at the 1 month, Walgreens bottomed at $20 on December 5th. So it is up from there. It peaked at 27, right now at 25. So it's up from the bottom in December after the Fed pivot, but has not seen too many continued gains from there. Michael Wilder says Jeremy suspected this would happen a while ago. He's out of Walgreens, right? Or does he still own it? I actually don't know. I think he's out of it. But I could be wrong about that. All theft. Yeah, I mean, the theft stuff, they've had to deal with that as well, as Adam says in the chat. Locking up the stores, things of that nature. Again, the move by Walgreens is good to secure their balance sheet. It's not like it's a bad move. It's just, again, when you get rid of the dividend, what's the incentive for shareholders to own a stock that's not profitable and not really growing? And I mean, there is a dividend. It's not like they've gotten rid of it, but it's just a significantly lower dividend by 17 cents that ends up not making shareholders the most excited to continue to own the stock. Walgreens was up 5% pre after the report. Then the news on DVD came out. Huh, interesting. Okay, I'm gonna look that up. Wow, that means the market was actually excited for it, and then it got tanked. People are robbing the stores right in front of me every day. It happens, and I have to wait 30 minutes to get deodorant for them to open the alarm glass. Yeah, that's not long-term bullish for any of these retail companies that have to ultimately serve the consumer. If you're that afraid that people are gonna, steal from your store, that's tough, dude. And the Target CEO talked about that as a real thing. People think that's just like that's like a line item, like you have to account for stealing. Like, no, it's actually a real impact they're having in the entire store experience. And a lot of people are like, just, all right, screw it, I'll just buy it from Amazon, right? Like, like they'll just order it instead and not have to deal with that. All right, so that's the jobs report. That's Walgreens. Let's transition to Bitcoin. We got our boy Anthony Pompliano, who's on CNBC today, and let's see what he has to say to pump up these ETFs and if we're actually going to get them.
Closer to the SEC's January 10th deadline to approve spot Bitcoin ETFs. Joining us now with more on the various regulatory outcomes that could impact crypto trades, Anthony Pompliano, founder and partner at Pomp Investment. Anthony, good to see you this morning.
Absolutely. Thanks for having me.
So I have to just dial back. I go back to when the SPY was listed 30 plus years ago. I covered it then. The USO, the oil ETF, the gold trust in 04 and 06. There was never anything like this anticipation. We don't talk about ETF launches and who the authorized participants are. This is bureaucratic back office stuff. It's just how the trades function. So all of which is to say the degree of anticipation of this and how it's made its way into the market is extreme. How is it not just a anticlimax when it happens?
Wall Street is getting invited in anticipation of the greatest show on earth, right? Bitcoin has been.
He's pumping. He's doing his thing. Keep doing it, pump.
The best performing asset for the last 15 years. And Wall Street's basically been boxed out of it. They haven't had access to this asset. And so I think that's what you're seeing in that pent up excitement. One thing that I do caution these Wall Street investors is you can't trade this like other assets. We saw just yesterday about $1 billion of open interest got wiped out. The guys over at Reflexivity Research did a fantastic job outlining, saying, this asset in 2021 went up almost 800% from before the pandemic started to the kind of the top of the market.
Yeah.
During that time, there was 30% drawdowns. If you're going to try to get levered long and think that, hey, ETF gets approved and this thing just goes to the moon, you're likely to get shaken out or get liquidated.
That is really good advice. Just beware the volatility.
I mean, this thing is on a risk return basis, it's by far the most attractive asset in all the financial markets, but it comes with tons and tons of volatility. And so if you go back to 2017, it was $1,000. We're up 45x since 2017. But along the way, we've had two 80% drawdowns, a plethora. I can't even count how many, 30+% drawdowns. And so Wall Street is saying, hey, the ETF's coming. Here we go. Now, I do think over a long period of time, Bitcoin's price is going to continue to go up. We're going to have a persistent bid from all these ETFs. Another thing people aren't talking about, everyone's talking about the primary fund flows. So retail or institutions buying this ETF. But actually what we're starting to see now is other publicly listed funds or ETFs are changing their prospectus to say that they can put up to 15% of their AUM in the Bitcoin ETF. So if you have the best performing asset and you got an ETF that's lagging, why would you not put Bitcoin in your ETF?
But all of this really formalizes the greater fool aspect of why Bitcoin should go up, right? It's just there are more people who are going to get in there and buy, and they have a new easy way to do it. Meanwhile, it's easier to own Bitcoin directly than it was to own a barrel of oil or a gold bar or a futures contract. When those things were introduced, it didn't change the overall price curve.
I think there's 2 points that you're making. First is when you buy this ETF, you are not buying Bitcoin. You are buying exposure to Bitcoin. But if you want to actually own Bitcoin, take self-custody, you should definitely go do that and not do it through the ETF. The second thing, though, is this kind of greater fool theory. One thing I always say to people is, what is the most valuable commodity in the world? In my opinion, it's computing power. Bitcoin is the strongest computer network in the world. And so when you're buying Bitcoin, you're buying an asset that is backed by the strongest commodity in the world. So when you start to think of it from that perspective, yes, it is internet native. Yes, it is for this kind of digital generation. But those people don't look at oil or gold or anything else as the most valuable commodity. They look at computing power. And that's why Bitcoin's so attractive to them.
Can I ask you a very simple question? If I own Bitcoin through an ETF, do I have greater protection of my ownership of that Bitcoin interest than I did through some of the exchanges where I've heard some nasty stories?
So you definitely have the exposure, and obviously it's a regulated entity. You have the ETF structure, all the things that I think Wall Street really enjoys about the protections of those regulated funds. What you don't have, though, is direct exposure and ownership of Bitcoin itself. So one of the beauties of Bitcoin is similar to cash. You can go to the ATM, you can take the cash out of the machine. With Bitcoin, you can actually take self-custody. You can own it. You don't have to rely on any counterparty. You don't have to rely on an exchange. You don't have to rely on an ETF provider, et cetera. And so people have to ask themselves, what is my comfort level? Am I comfortable taking self-custody, or do I just want the financial exposure and I don't want to deal with that? And I think that that's where you're going to see a lot of people who have been sitting on the sidelines. Institutions, they can't take self-custody. They need the ETF to be able to actually allocate to the asset.
Hey, Anthony, the CoinDesk, The Block, a lot of different places are reporting on this Matrix Port report from an analyst who says that the SEC is going to say, forget it, they're going to reject the ETF, the spot Bitcoin ETF proposal. I know you think that's a real long shot. What would happen if they actually did do that, if the SEC said no?
If they approve it, I think that there will be a lot of short-term volatility, and then we'll kind of get right back on track, whether it goes up or down after the approval. If they reject it, I think the same thing would happen. There would be a lot of kind of short-term volatility, and we'd get right back on track. The beauty is with Bitcoin, if we go back, we saw something like this. China.
Okay, that's cap. That's absolutely. You see how quickly he spoke through that? He was like, well, if they disapprove it, it'll also go up or down. That is absolute cap. If they don't approve it, we are headed down, folks. I mean, just the rumor of us not approving it sent Bitcoin from 45,846 to 40,643 yesterday in the span of 10 minutes. He got through that really quickly because he did not want to say what everyone doesn't want to hear, which is that if it's not approved, this sucker's going down.
Had over 60% of all mining inside of their borders. They completely banned mining and kicked them all out. 50% of the hash rate went offline. By the end of that year, May of 2021 is when it happened. By the end of 2021, mining hash rate was back to an all-time high. And so this thing is just resilient, it's anti-fragile, and it continues to just do what it was designed to do.
But that's true, although the risk reward, the returns based per unit of volatility you cite, it really depends on the starting point. Right? I mean, 2.5 years ago, you were here, you were saying $100,000 really soon, we're going to get there on Bitcoin. And it's been nothing through this inflationary spike and a Fed tightening cycle.
I always say, look, at $8,000, right? I thought I was going to 100. It only went to 70. I was off by a little bit, right? But in terms of, I think these directional moves, again, it goes back to, there is a lot of volatility here. Yeah. And I do think that the volatility will dampen as obviously ETFs and kind of more persistent sticky holders come into the market. But remember, we aren't just talking about an ETF either. We also have the halving that's coming up at the beginning of Q2, and we've got to return back to loose monetary policy. And so I think that we're going to see a pretty significant move in Bitcoin. Just don't expect it to go from 45,000 to 1 million tomorrow.
Right.
Okay, so look, I mean, he makes his point, and at the end of the day, look, we've got to get this ETF approval if we want Bitcoin to pump. If it's not coming up, then it's not going to be there. And that's why he's invited to CNBC, because now in a couple of days, we're going to know if this ETF gets approved. It's really interesting, though, because when the ETF gets approved, again, the bull case here is that more funds will have to purchase Bitcoin, because if I'm buying the ETF, obviously if I'm buying the ETF, that means I'm buying exposure to Bitcoin, which means some institution has to have that Bitcoin. It's just like Palantir in the S&P 500. The bull case is that, if I buy the S&P, I'm getting a piece of Palantir, which means the S&P has to literally buy a piece of Palantir in order for me to get exposure. This is why when Apple falls, the S&P falls, because Apple is 7.31%, I think, of the S&P. And so if you're buying the S&P, you're buying, $10,000, you're buying $700 of that worth of it being in Apple. So from that perspective, it is more demand side pressure. I am curious, the manipulation of the ETFs just from shorting and all the different things that traders can do, what impact that has on Bitcoin, or is it directionally correlated just to the asset itself, and the potential manipulation of the ETFs doesn't do anything? We heard yesterday that the futures contracts introduced on Bitcoin in 2017 allowed a vast amount of manipulation in order to push the stock up or down, or not the stock, but the currency up or down. Nonetheless, there was an introduction of different things traders could do that could work with Bitcoin. June says people with a lot of money want stability. If Bitcoin is supposed to be a store of wealth but super volatile, people who aren't gambling won't buy big sums of it as a store of wealth. Yeah, I think, look, the $6 trillion that are stuck in money markets, I don't think a lot of that is being excited to get into the Bitcoin ETFs. But you got to remember, I think of Bitcoin in terms of an allocation of your portfolio the same way I think of ARK Innovation. So I think, what Pop did make a good point of here is that we are seeing ETFs apply to have 15% of their AUM, or their assets under management, allocated towards Bitcoin itself, which I think is incredibly interesting, because it means if a BlackRock or an ARK Innovation gets approved, that means other ETFs will have the freedom to at least ask the SEC, hey, we can own a lot of things in our ETF. We can own commodities, we can own big tech, we can own gold. Can we also own some Bitcoin? So I think of it like ARK, because ARK has consistently, always said consistency, we are not something you should be 100% in. ARK has made it very clear that we are exposure to the more growthier names of the market. One could argue that ARK doesn't have the most growthier names, especially the way big tech has performed in comparison to ARK last year. But nonetheless, Cathie's whole point is 2 to 3% of an institutional hedge fund should be allocating money to ARK, which is a couple $1 billion from that perspective, because if the broader markets start to do well, her name starts to do really well. I think that would be the same way when we think of Bitcoin from that perspective. And if that is the case, then, a lot of people will want exposure to it, at least some exposure, even if they have a ton of money in more safer assets. Now, one other piece of news on Bitcoin. So I had an experience with Bitcoin yesterday. This experience I had made me more bullish for Robinhood. More bullish for Robinhood. Before I get into it, if you all could please just like the stream. I got to be better at asking people to like the stream, because I realize I don't ask people to like. So if you all just take 1 second and please press that like button, that would be awesome. Super good for the algorithm, and YouTube loves seeing your likes. Okay, so this is the experience I had yesterday. On Robinhood, I was trying to send some Bitcoin to someone. The Hood network fee for sending $5 of Bitcoin was $4.20, which means it was going to cost me $9.20 to send the Bitcoin. On Coinbase, they were trying to charge me $14 to send some Bitcoin. And in my head, I was just like, now I know why Coinbase is getting all this buy side pressure, because everyone knows that they're ripping you off on these fees. This is just absolutely insane. So by the end of the night, I had to send $1,000 to someone. And so this was just an example of testing what it would be like to send $5, just because I wanted to know it would actually work. So I sent $1,000 last night. The Hood network fee was $2.45. I went on Coinbase and they were asking for $13. I don't know how Robinhood is able to make those network fees smaller. And again, I don't think Robinhood gets a cut out of the network fee. That's literally the fee you have to pay to the ledger blockchain thing that's like allowing you to send the money or whatever it is, right? I'm not the most educated on it. I'm trying to learn it more. But for some reason, Robinhood was cheaper. Dude, I think people are going to realize Robinhood's just easier to do a lot of this stuff. And it's not going to replace Coinbase. It's not going to take away massive market share. But at some level, the Coinbase didn't get my business last night. They didn't get my business last night because they were charging me a ridiculous amount of money to send something, whereas Robinhood was charging me 1/10 of what Coinbase was trying to charge. So from that, network fee goes to the miners. Interesting. Okay, so low network fees maybe is not actually the best for the miners. That's interesting. That's something I got to look into in terms of how that network fee actually gets dispersed. Nonetheless, I don't know what Robinhood did to make that fee low, but they made that fee really low. And it was $2 to send $1,000 is actually lower than what some banks would charge you. Like, it's lower than what PayPal charges you to send $1,000. So from that perspective, I got very bullish on Robinhood as a wallet to send and receive Bitcoin. Pretty bearish on Coinbase yesterday, even though Coinbase is going to get the majority of business. They just have better market share. They have better brand when it comes to crypto. But Robinhood was cheap, dude. It was cheap. Was it lower than Cash App? Cash App didn't approve me when I tried to verify myself. So Cash App also lost my business because Robinhood approved me within about an hour. Cash App, they just never approved me, so I wasn't able to send it via Cash App. I would imagine maybe Cash App was cheaper, or maybe it was the same. I didn't get to try. Eventually, when they approve me, I'll test. But Robinhood was easy. Do different brokerages use different miners? I don't think they get to choose the miners that they use. I think the miners are just the miners, and then the brokerages operate, and then the miners have to facilitate the competition within themselves to be able to get the fees. So I don't necessarily think it's based on that. Engineering Adjacent says Coinbase has a subscription where you can trade and send with zero fees. If you trade and send a lot, it pays for itself every month. That's fair. I think it's like $30 a month. I am not sending that much Bitcoin every month. I mean, this is like the first time ever I really sent a substantial amount of money, which is $1,000 via Bitcoin. So I would not pay for that subscription, but I guess it is reasonable for people that really do send it a lot or pay for it a lot. Quick news on Cathie, and then I want to show another clip to you guys around what's going on in the markets. Cathie Wood bought some Tesla yesterday. So where's Cathie? Right here. So interesting purchases by Cathie. She ended up buying Tesla. Okay. She bought about 100,000 shares of Tesla. She sold off some Coinbase, which makes sense. Sold off about 145,000 shares of Coinbase. 160,000 shares of Coinbase. And she bought 27,000 shares of Rocket Lab. I don't know her full thesis on Rocket Lab, but this is the third time this week she's bought Rocket Lab. So, I mean, she's been buying a couple 100,000 shares almost every day. Yesterday was 27,000 shares. And she bought 100,000 shares of Tesla. Now, Tesla was down 4% yesterday. Really just down because of the macro, no like actual news. If we look at Tesla right now, in the pre-markets, Tesla's down again, 0.13%, so 238. She's been right on Tesla historically in terms of timing it. She did buy in the 247 range last week. So I guess it makes sense that she's buying the dip, because usually when she starts buying Tesla, she starts buying Tesla. Maybe she's anticipating that the January 24th earnings are good because Tesla's input costs have come down, because inflations for commodities writ large have come down. And as a result of that, there's going to be increased margins. We probably know that automotive margins have bottomed. I mean, it seems pretty obvious that has happened for Tesla. Now they've got to show it in the numbers. And if they do show it in the numbers, maybe Tesla starts getting some forward-looking price projections, and Wall Street starts buying up the stock. Adam Jonas, the guy who left the Jonas Brothers band to analyze Tesla, he's been also continuously bullish on Tesla. He came out with a price target. I mean, not a price target, but it came out with a continued maintaining of his $380 price target yesterday. He says, in our view, Tesla's long-term volume goals cannot be achieved without securing a diverse range of partnerships across global regimes. Outside of China, we struggle to see anyone who can compete with Tesla at this stage. We don't think it's a coincidence at all that Tesla has stepped up engagement with foreign countries, and it's coming at a time when China has surpassed Japan as the largest exporter of passenger cars. Basically saying that the reason Tesla's meeting with Mexico, the reason Tesla's meeting with India, the reason Tesla's thinking of starting all these new factories in different places is because they're recognizing that there are different global and foreign partnerships that they can engage in that are primarily going to be the new level of growth, because outside of China, where BYD is kind of dominating, there's no one else that can beat anything outside of Tesla. And as a result of that, they are pretty excited around Tesla. This is their Tesla valuation, as you can see right here. So Tesla Energy is about 12% of the pie. Tesla Auto, 22%. That's the core business. Tesla EV training, the third parties, are about 10% of the business. Tesla Network Services are about 30% of the business. And then mobility ride sharing is 21%. I would imagine that's kind of like the robo-taxi thing that Tesla's going for. And then Tesla Energy is about 12.6% of the businesses as well. So Adam Jonas continues to be bullish, and they see no reason why Tesla is not going to be the company that everyone thinks it can be, because there's just no competition that can really mess with them. Joseph Vega says, I thought Tesla sold all their Bitcoin. They did. They had about 10,000 Bitcoin at 31,000 average. If they had held it when Bitcoin fell to 15 back in June of 2022, I think it would have been pretty rough for the company to be able to deal with that, and shareholders would have been pretty upset. So it was a good sell. They like barely made a profit. I think they made like 10, 15 million on it or something. I wouldn't imagine they buy it now. Same thing with Palantir. People are like, oh, well, Palantir buy Bitcoin. Like, I wouldn't hate if they buy Bitcoin. I just think the volatility of it would make the average shareholder really scared. And long term, if you think Bitcoin's going up, then even if it's volatile in the short term, that's okay. The problem is they have to report it on their balance sheets. And if they have to show it as a loss on paper, they have, that messes up their EPS, their profits, all that stuff. So you kind of would rather they get really comfortable and they actually start growing at 25% before they take investments like Bitcoin. They have 9,000 Bitcoin still. Okay, well, I didn't know that. I guess that. So wait, so why isn't Tesla going up then if Bitcoin's going up? If they have 9,000 Bitcoin, that means there should be some correlation with Tesla stock price and Bitcoin if Bitcoin's going up. I mean, because Bitcoin has gone up pretty dramatically. It's not like Bitcoin's up 1%. Interesting. I didn't know they have that many Bitcoin. Okay, that's something I got to look into. I did not know Tesla actually had that Bitcoin. Okay, let's get into this as well. I want to go to Oppenheimer's John Stolfus. He is the largest bull on Wall Street right now. He thinks 5,200 is coming no matter what on the S&P. Let's discuss why he thinks that's the case.
In the year at a level of 5,200, that's more than 10% rise from yesterday's close. And he is among a handful of Wall Street veterans that also believes the S&P will surge to new highs this year. That would, by definition, we're just a couple percent away, right? Here with us now is John Stolfus, Chief Investment Strategist at Oppenheimer Asset Management. John, good to see you.
Good to be here. Thanks.
So it's interesting, and on one level, you kind of think we can have a pretty good year. On the other hand, when the biggest bull on Wall Street saying we got maybe 10% upside, it suggests overall sentiment maybe is somewhat subdued. How did we come into the year in terms of maybe everybody expecting a soft landing, and which direction of the surprise is going to go?
Well, Mike, I think actually, in December when we put the target in, it indicated 13% upside.
Yep.
But that would still be about half of what the market did last year. We can't help but think a good idea to be conservative in here moving into this year, in the sense that we do expect things are getting better. We're moving towards a normalization, stabilization in interest rates. And with that, the thought is still we've got plenty of volatility out there in terms of uncertainty in geopolitical risk that could actually affect food and energy supply chains in a part of the world that's important. And so a lot of thought there.
We know that a slowdown should happen of some character, right? We had like a 5% GDP quarter, third quarter. It's a question of how much, right? So yesterday we got the job openings and quit rate data, a little bit soft. You see labor market slackening a little bit. Manufacturing still not really bouncing back. And I guess the question is, are we going to be able to stay on that path of slower but not stalling?
We can't help but think that slower but not stalling. We think the Fed has been amazingly sensitive to the effects of it practicing its mandate on the economy. It's part of what we call the Ben Bernanke legacy, and we think Powell is practicing that. When you consider, what is it, something like 11 hikes and 4 pauses or something like that in so far, and no recession. The resilience that's seen in business and the consumer as well as in labor. All of this looks remarkably good, and we think the Fed is, we've said now for over a year, we might actually skirt a recession, and now we're even beginning to think perhaps we do get a soft landing, which would be remarkable.
John.
Now, the other thing, the point he's making about the labor market, for those that are just joining, we got 2 pieces of data over the past couple of days that are incredibly important. Yesterday was the JOLTS data showing how many jobs are left in the United States of America in terms of openings. Today was how many jobs we added from private employers. Yesterday, we had 8.79 million jobs open for Americans, 1.4 jobs per American that's unemployed. And today we added 34,000 more jobs, 167,000 total in private payrolls. Wall Street expected 130,000. Again, we are showing signs, and this is why that guy from Oppenheimer is continuing to say 5,200 on the S&P is not that crazy, because if you've got decreasing inflation with increasing growth, the consumer is not being sacrificed in order for that growth to be able to increase because they have a job. That's the whole point. Then unemployment is not getting to the point where it's likely going to need some type of major reversal or some type of crash in order to be able to deal with the fact that the consumer is not strong because unemployment is not getting to that level. Until we see the labor market turn, I think we are still in the Goldilocks zone. And maybe that Goldilocks zone changes in the next 6 or 7 months. But so far, you cannot argue. I mean, there's literal logic. You just cannot say that the consumer is in a tough position and that the economy is going to be hard to be able to reconcile with when everyone has a job, right? Because they're spending and the Fed's not printing and we're having quantitative tightening and inflation's coming down. Inflation stops coming down or the consumer stops having a job, then we're in a whole different boat. But so far, those two things are happening. And historically, they don't happen at the same time. And they are right now. And that's why this is such an exciting market, because there theoretically could be a very strong year after a year that was already strong, a year that was kind of a rebound year, based on this idea of this Goldilocks zone actually playing out and, you know, and not being as bad as we all thought it was going to be. So as a result of that, that's why we're seeing some strong market momentum, at least in the beginning of the pre-markets. Let's see what we got in the pre-markets right now. Verizon is up 1.44%, $39.73, trying to get to that $40 range, about 27 cents away. Bitcoin, 43,360. Again, Bitcoin staying within these within this range of 41 to 44,000. It broke out to 45,000 a couple of days ago. Right now at 43,000. Rocket Lab is up about 0.2% in the pre-market. CleanSpark up 4% in the pre-market. The miners actually performed pretty nicely yesterday. Did not expect the Bitcoin miners to be as bad as they were. Marathon is up 3%. Coinbase is up 0.49%. Riot is up 1.73%. And Hut is up. Where's Hut? Hut is flat in the pre-markets. Yeah, Hut is basically flat. So the miners are up, which is really interesting because, I mean, they were basically down yesterday, but not down as much as we thought they were going to be down. And so they're doing well. Palantir is 1609 in the pre-markets. Today, Palantir either breaks below 16 or maintains that 16 level. There are a lot of people that want Palantir below 16. And so if it hits that, we touched 1597 yesterday, but immediately we spiked back up. I talked about it on the newsletter yesterday, dailypalantir.com/subscribe. If you are not subscribed to the newsletter, free newsletter every single day. If you're a Palantir investor, quite frankly, you have zero excuse to not be subscribed to this every single day around 11 p.m. You get a 5-minute update on what's going on in the world of Palantir. I was talking in the newsletter that, we briefly touched 1597, but there is so many shares. If you just look at the order, the book volume on volume 2, when it comes to Palantir, that are waiting at $15, that as soon as we drop there, the market's ready to buy it up, right? And so when you've got that much support that's just waiting to gobble it up, then, people are ready to buy. I mean, I'm looking at the book volume right now. You got 10,000 shares waiting at 1520. You got 4,800 shares waiting at 1562. You've just got thousands and thousands of shares waiting below that level. Now, we'll see when the market opens how much that support entails, or if people just decide to sell off. But so far, there is enough demand side pressure below 16 for people to buy. Some shares. Jared says, think Palantir is getting closer, has already bought back shares. No, I really do not think that Palantir is buying back their shares. I just don't think they want to buy back shares right now. I think they wanted to give shareholders the option for them to buy back shares, but they're not at the point as a company yet where they are ready to buy back shares. They're not fully profitable, all that stuff. And their operating income is much higher. But if they do buy back shares, that means Q4 is going to crush because they're so confident at these valuations that they think that they're undervalued, that's a good sign for shareholders because that means growth is probably coming back. All right. It is January 4th, 2023. Ladies and gentlemen, once again, the stock market is open. Wake your ass up. Look at Palantir, $16.01. It is literally, there you go, $15.96. There you go. There it is. There it is. It was just struggling to try to stay above that level. Now $15.99. This is interesting because yesterday we went up to $16.30 from $16.09. So we just went up 15 cents and we never saw 15 again. Now we're kind of stuck in the $16.02 range. We've got 1.9 million shares that have started to exchange hands already on Palantir, as we can see right here. And so it's coming down. It's trying to coming back up at 16.05, down 0.21%. You've had 300,000 shares in the pre-market. So you had about 1.22 million shares as soon as the market opened. That was more on the sell side versus the demand side because we saw Palantir fall back down. Right now, down about 0.16%, rebounded right back to that 16.07 range after touching 15.96. Let's see if it goes back to that 15.97 range. I mean, it was there, and like I said, there was enough buyers immediately ready to buy up those shares when it hit 15.97, 15.98, that it just rebounded right back to the top. And now Palantir is green at 16.11. We'll get back to Palantir in a second, but it was definitely ready to fall, but ready to be picked up as well. Tesla is green, 239, up 0.29%. Marathon up 2%. Coinbase up 0.66%. Riot up 1.2%. Verizon 39.62, up 1.17%. Celsius 55.70, up 0.61%. Netflix 472. Hims is green, 9.20, up 1.6%. This was stuck at like $6 back in 2023. So for those that picked up a lot of Hims at that level, congratulations on that. Clean Spark 10.92. It is up 3.32%. So not bad at all on Hims. On Clean Spark. We're seeing a little bit more momentum there as well. Robinhood on the day is kind of flat. Whereas Robinhood, we got 1178. So basically flat, down about 0.06%. Nothing too crazy. SoFi is green, which thank goodness, because we were down 14% yesterday on SoFi. So it's nice that SoFi is not necessarily green again. Let's go to Rivian. Rivian was almost below $20. Rivian at $20.03, down another 1.43% on the day. Let's look at big tech. Well, first, MicroStrategy is up 1.58%. Truist up 2%. So the bank doing well. Moderna 108, up 0.14%. Toyota's up. Advanced Auto Parts is up. XLF financial sector is up 0.59%. Financials have done well. I think they're going to do really well in 2024. So we'll talk about financials more, but they will start their earnings next Friday. Nvidia 479, Google 139, Meta 345, Apple 182, Amazon 144. So big tech is big tech is not really down, but they're not really green. They're kind of just flat on the day. We got Meta that's green, Google, Apple, Amazon are red. Apple now 182. Wow, Apple down 1% already. Wow. Did not expect Apple to be down a percentage point. Again, remember, when Apple's down 1%, it's different than any other company being down 1%. I mean, Apple is it's a big part of the market. So when they drop 1%, that's just a lot, when it comes to Apple. So Apple is down now at $182. What else do we have here? Arc Innovation 48.22, ASML, that's a 701, AMD 135. The market's down, but the market's not down, in a ridiculous way. It's just I mean, the S&P is green, right? Green or flat. Either we're red a little bit or we're green, we're green a little bit, but we're not super red or super green. SoFi now is red. There you go. SoFi down 1%. So SoFi falls. Look, on a day when Apple's down 1% in the first 4 minutes of the market, I would imagine a lot of other stocks are red. Robinhood down 1%. There you go. So now Robinhood's red. Rivian 1983. Rivian's down Rivianhood. Rivian's down 2.46%. S&P just turned negative, kind of turning positive. It is basically flat. And then, wow, look at that on SoFi. Look at that red candle. Oh my. That's like that's red. $8.18, 1.62%. There you go, folks. There's the red on SoFi. That's tough to stomach at SoFi, Cheryl. That's tough to stomach. 1.6, because we were just down 14% yesterday. So to be down close to, and then that was 4% the day before that. Now 1% today. You're talking about basically a 20% drawdown within 2 days. That's tough. Palantir holding on for dear life at that $16 range. It was just at 16.01. Now it's 16.08. Holding on, trying to not be below 15, but it's tough. It's not the easiest right now. It is not the easiest for Palantir to hold on to those levels. It is not the easiest. SoFi needs to get 790. I mean, yeah, I think there's a lot of support for SoFi in that $7 range, but just seeing it get back there would suck for a lot of shareholders. PayPal, of course, is down 1.93%. PayPal just like, either PayPal hoodwinked all of us that thought it was undervalued, or PayPal is going to take a lot of time to play out. And quite frankly, it's probably going to take just a lot of time to play out. It's going to take a while. It is going to take a while. We're seeing some red. We're seeing PayPal's getting spanked. Oh my, PayPal's getting spanked. Enphase also getting spanked, down 1.5% now at 120. I always thought 140 on Enphase was kind of insane, but like, we're here. So 120 now on Enphase, down 1.49%. Nvidia 479, Meta 345. What else? QQQ 397. So down 0.22%. Nothing too crazy, but it is down. Snapchat 1582. This is green. Again, I'm I don't know why Josh Brown bought this and he thought it would go to $34. Maybe in a really bull market it does, but that was just a weird buy in my opinion. At $8, you could take a gamble, but at 15, it's like a little tough on Snapchat. Granted, their earnings might crush because again, their AI subscriber growth is going higher, so that might be their bull case. S&P, a little bit green. We got 0.04%. Robinhood, a little bit less red than it was before. Tesla's green, so that's nice to see on Tesla. And then Palantir is red, but basically flat now. It's 16.09. Oh, wow. We got someone in the chat got Palantir at 15.99. Not bad. Some of those limits probably filled for a lot of people that had those there at 15.99 or 15.80. So that's not bad at all. Bank of America is also green today. American Express is green. Coca-Cola is red on the day. Interesting, folks. This is really interesting. This is another red day, but not a super big red day. So it is continuing the trend of it being red, but not being super, super red as it was over the past 2 days. But it's definitely not reversing to the green. You got some stocks that are green, but the far majority of stocks are indeed red. Tesla is green on the day. Walgreens, wow, down 9%. Their earnings, for those that are just tuning in, they slashed the dividend from 48 cents to 25 cents. That's why they're down 9% right now. Market did not like that. Even though it's obviously going to help secure up their balance sheet, market did not like that they did that. SLG is green as well, up 0.3%. You got Verizon, here you go, 39.64, up 1.2% on the day. Celsius also red, 54.83. Let's get an update on big tech and if this is a dip to buy on big tech or if we need to wait a little bit longer to think of buying some of the Magnificent Seven stocks. Let's take a look at this.
Flipping yesterday with the Dow and the S&P posting their worst day since December 20th. Joining us now for more, Sylvia Jablonski, CEO and CIO of Defiance ETFs. Is that right? Did I get that right, Sylvia?
Yes, 2 days of trading, right? You want to go into the new year with the market rallying after what we saw towards the end of last year, but I'm not too worried about it. We saw that big run up from November until, pretty close to the end of the year. And I think that some investors actually did take a little bit of gains off towards the end of the year and maybe for tax reasons into the beginning of the first couple of days of this year. So it could be just a little bit of an overbought pause. I'm not reading too much into it. I don't think that much has changed in terms of the market from a week ago. And, the reason that we might see a market rally in 2024. So different rate environment. The Fed is no longer going to be hiking rates. Corporate earnings were strong. GDP held up. Consumer held up. It feels like we have that soft landing. So I expect this to be a pretty decent year for equities.
With the last 2 days of declines, are we still in an overbought situation, and how do you gauge that?
Yeah, I mean, I think it's hard to say whether that, kind of completely wiped out what we saw in terms of just positive sentiment and just, the market getting super excited about the talk of the Fed going into the end of the year about the potential rate cuts this year. So I think the answer is it's hard to say. I think that, a little bit of the froth came off the market, and I think it's a good time for investors who particularly are looking at the Mag 7 to consider buying on these dips. So whenever I see 1% to 2% pullbacks in some of these stocks that just have so much room to run for various reasons, and that is the Mag 7 in my opinion, I do like to kind of dollar cost average in and just hold it for the longer term and not worry so much about whether or not they move down another 0.5% or so before they rally back up another 10 to 15 before the end of the year.
Now, the reason they would rally another 10 to 15% again is because of earnings growth. That's one of the points that she goes on to continue to mention is that earnings growth is going to be likely better than what a lot of people expect, or at least what they think they can expect, given the nature of AI, the companies, how well they do. We just had Q4, which was holiday season, right? So that is the bull case for it. The question is, how good do those earnings have to be to really get the market excited? And I think that's the question none of us really know the answer to. Marathon's green, Tesla's green, Riot's green, Robinhood was green for just 2 seconds. Now it's red. SoFi is recovering. It was down about 1.3%, now down 0.66%. S&P is green. We are seeing the stocks that were down in the morning start to get higher or not be down as much. Or you got a Palantir. Look at that, baby. Palantir's green, 16.14. We're seeing kind of what I talked about yesterday. We're seeing the dip get bought. Like, we are not seeing continuous declines in a lot of these stocks. And I know it's early and things can change throughout the rest of the day, but the dip is being bought. I mean, you would imagine that these stocks just continue to sell off, but every time they go down, there is someone waiting there to try to catch that knife before it goes all the way down. I mean, and on a day like yesterday, we had some stocks that were down dramatically, like SoFi. And on a day like today, you've got people that are like, all right, well, we're going to take a gamble here and see if there's any momentum that's left in these guys. Is there any ETF that tracks the Magnificent Seven? Basically the QQQ, in my opinion. That's not only the Magnificent Seven, but the QQQ, if you look at it, is a majority of just those Mag 7 stocks. And I think they've got some Broadcom and some ASML. They've got all tech stocks in there. So if you're buying the Qs, you're basically buying Mag 7. If you're buying the S&P, you're basically buying Mag 7. But if you're buying the Qs, you're having a much more concentrated risk allocation towards the Mag 7. Remember, the S&P was up 24% last year. The QQQ was up 54% last year. 54% in 1 year on an ETF is not easy, because the ETF is supposed to mitigate a lot of your upside, just like it mitigates a lot of your downside by being balanced. But if the top 7 stocks in the ETF that have the highest allocation go up 80% each, well, the ETF's going to do well. So QQQ is probably mostly the Mag 7, as Douglas says, because they're so heavily weighted. Austin Smith says, do you think Apple Vision Pro can be a good source of net income? I'm not sure how many units will be sold, but I like seeing Apple move into that space. I don't think this year the Vision Pro is going to have some type of substantial growth curve for Apple. It's one of those developer years where you get people a chance to play with it so they can figure out what to do with the product, and then they have better R&D in the future. $3,500 is just way too much. They got to get like a $1,500 version for consumers. But Wall Street seems to be bullish because they're giving Apple a multiple without Apple growing, because they expect that Apple is going to grow. And I think that's why, people are pricing that the Vision Pro will do well. And maybe it does, but if it doesn't, then it's going to be a little bit of a tough situation for Apple to grow. Let's get an update from Dan Ives comparing Tesla's numbers to BYD and see what he has to say. He was on Bloomberg recently. Let's see what he had to say about this morning.
BYD is in this 2-horse race with Tesla in China. But I don't view that this really diminishes what Tesla has done. I mean, I think this was, and we'll see in the next few weeks, this was a record quarter for Tesla in China. And price cuts have actually subsided. So what you're really seeing play out right now is Tesla and BYD at the top of the mountain. Everyone else is looking up to them. It just shows that China EV market, I think, a lot better than expectations across the board, bodes especially well BYD and Tesla.
Here's the thing, though. I mean, the game for EV makers, Dan, as you well know, is it's a race to the bottom, right? Who can punch out or push out affordable vehicles so that they get more penetration, they get more traction with the buyers. That's been known for a long time. When you take a look at what BYD is doing, outsold Tesla Q4. Their biggest markets right now are Thailand and Israel. They haven't even gotten to the U.S., and their cars sell for about a third the price of an entry-level Tesla. So, they're not just nipping at Tesla's heels. I mean, these guys are a major challenger.
Oh, and I mean, I'm a big believer in BYD and someone that spends a lot of time, in Asia and seen it firsthand. But we're talking about a green tidal wave. I mean, this is the biggest transformation to the auto industry since 1950s. It's not necessarily a zero-sum game. You're going to have massive winners. BYD and Tesla are in what we'll call it second, third inning of a 9-inning game in terms of where this is all going in terms of EVs. But this is going to be a Game of Thrones battle between Tesla and BYD, and everyone else is trying to chase them. But the other thing that's starting to happen is some are peeling back from EVs. That's what you're seeing in Detroit take hold.
Would you agree that BYD has two sort of secret weapons? At least one of them is this low base effect you talked about, right? In terms of penetration, they're not even in the US yet. The other thing is I note that BYD actually makes hybrids as well, whereas Tesla does not. I mean, for that sort of in-between period that we seem to be in right now.
Well, I think the hybrid strategy has been a big part of their success, the vertical integration and the pricing. I think BYD they were able to maybe see forest through the trees from a pricing perspective. Tesla, clearly I think was caught a bit offsides, which is why you saw them needing to cut prices to sort of get to the mass market. But BYD, this global expansion that they could start, I mean, they are going to be a household name basically globally, I think in the next 2-3 years. Obviously, we got to see restrictions and how it all plays out. But I would expect in the next 12, 18 months, we're going to see BYD dealers in the U.S., throughout Europe, and across the world.
Yeah, look, I mean, I agree with Dan here, which is that also at the end of the day, Tesla has the software and the technology that can allow them to expand globally, and the brand recognition versus something like BYD, which I think is a big deal. The question simply becomes, can they show it in the numbers going into Q4, because Q3 numbers obviously weren't the best, and are investors ready to front run them on that growth and buy the stock? That's the simple question. And if they do that, then Q4 earnings is going to be really fun for Tesla. If they don't, then we're in for a little bit of pain. And I think Cathie, who's timed Tesla to a T over the past couple of years, it makes a lot of sense that that's what's going to happen on earnings, and that's why I think she's buying ahead. Remember, she was selling before Q2 earnings in July at 280, 270, and she was right. We peaked at 299, and then we tanked all the way down below 200. So I think her buying is actually pretty bullish right now when it comes to Tesla. Let's get another last look at the equity markets, and then we'll be done for today. Things are still pretty flat. QQQ is red. SoFi's down 0.45%. S&P's green. Robinhood's basically flat. Coinbase is down. Marathon is down. CleanSpark. What about this guy? This guy is up 0.99%. Verizon trying to close in on 40. Palantir above 60. Above 60. I wish Palantir above 60. One day I'll be on the market open. I'll be like, oh, Palantir just above 60. No, Palantir is 16. Not 60 yet. It'll get there. It's a long journey to get. That's why we're all here on this journey. Not yet. Eventually, though, we will see it. Palantir at 16. Disney at 91. AMD at 135. Open Door at $4 as well. Alibaba's red, 1.58, 75. Alibaba was actually green yesterday. So when the whole market was red, Alibaba was green. Today it's red a little bit in that range. Truist 37.12. Truist earnings on January 18th. Excited about that. Look, Truist has done really well over the past about 5 months. I think if their Q4 can crush, this bad boy has a chance to sustain above 40. As interest rates are coming down, their tangible book value is going to go up. Their loan losses are going to decrease. Like if they can just show a solid Q4 earnings, which means their net interest income margins continue to at least stay stable. And remember, last quarter, they added $1 billion in deposits while every other bank was losing deposits. Like SoFi added them, right? But JP Morgan, Bank of America, they were all losing deposits to money market funds or equities. Truist added $1 billion. I was like, wow, that's because the regional presence Truist has in regards to their the small businesses they work with and the relationships they have, that allowed more trust and people put their money in the bank. So, I mean, if they can report higher deposits and just a broader economic stimulus to the bank, along with the fact that they are starting to cut $750 million in costs, then I think their earnings can be really good. And I think the stock has a shot to do well. Bitcoin, 43,400. Still Bitcoin at these $43,000 levels. We are going to know about this ETF soon, folks. It's going to come eventually. And we're going to know. And that's going to determine, I think, the rest of at least the next 6 months. It would be pretty crazy if Gary Gensler just says, nope, we're rejecting it. If he's just like, nope, I don't care. I don't care what you think. We're rejecting it. And you can basically go kick rocks if you have any complaints. But if it does get approved, then we're in a whole new ball game. I don't know. I have no idea. I don't even have a gut feeling either way. I feel like it's going to happen, but I could be totally wrong. And the only reason I feel like it's going to happen, it's not just like me guessing. It's because the research I've read is that now the SEC is asking all of these ETF providers about technicalities. And these technical questions you only ask when an ETF is getting ready to be approved. You don't ask about, why they deserve an ETF. You ask, okay, so like, where do I sign the papers, right? Like those are the types of questions the SEC is asking. Now, last minute, could it say, we don't care anymore, we're going to reject it? Yes. I just also think the SEC doesn't want to get into a ton of lawsuits because they would get sued out the ass if they reject it, because if they don't have a good reason for rejecting it, then it would be bad. Castoroi says, what was that word you created 2 days ago? The word is constantaneously. It's a mix of constantly and instantaneously. So hopefully the SEC constantaneously approves this ETF, because we need this ETF. Okay, we're going to do word of the day, folks, and then we'll be done for today. Thank you all for joining me on the Market Open. Word of the day, this is an interesting one. Jammy. Jammy means lucky. I've never heard of this word, jammy. Let me know if you guys have heard of this word. You would think because it means something as common as luck that we would have heard of this word. I've never heard of this word. It was first recorded in 1850. It is from the word jam, a preserve of a whole fruit. Jammy in the future sense is comparable to idioms to have a jam on it, meaning to have something easy. She found a parking spot right in front of the store. How jammy. I was running late for my flight, but luckily the airline held the gate open for me. Talk about a jammy break. I have never heard anyone use this word ever. That's UK slang? Really? It's a British word? We use it here in the UK? Really? Wow. That's a UK word. That's a UK word. Michael says it was my high school's best friend's nickname. Wow. So the Brits like the jammy. The Brits are very jammy. The Brits are having a very jammy day. The Brits are very jammy. I'm sorry. Don't hate me for that. That's crazy, dude. I'm going to use this word. It sounds like a person's name, though, jammy. Like, it sounds like Jamie. It sounds like someone's name. You jammy, bruv. You're jammy, bruv. In the UK, it's common to say you jammy. Interesting. I wear my jammies to bed. Ah, that was a good one, June. That was a good one. I wear my jammies to bed as well. That was a good one. All right. That is it for me. Bitcoin is ripping a little bit. Real quick, let me share that. Thank you, Mark, for putting that in the chat. Bitcoin, there's a massive green candle right there on Bitcoin. Look at that. 43,700. Nice little green candle right there. We'll see if it can sustain itself. That's about 1% just now, and see if we can get to that 44,000 level, but not bad on Bitcoin. Palantir, Robin at 1176. Palantir at 1619. Not bad at all. 1618 right now, up 0.59% on the day. All right, that's it for me, folks. Thank you for being here. Terrible UK accent. I'm sorry. I gotta get better at it. Even though I love the UK accent, I genuinely love it so much. But I gotta get better at it. I'll see you guys today. We still have the market close at 3:45. We have Palantir deep dive streams. Seems like you guys are liking that. Back at down at 8:30. And then me and Steve, most likely our podcast today will be around 5 p.m. So, or 6 p.m., 5 or 6 p.m. Me and Steve are just going to do a deep dive on one stock every single week. I'm not going to say the stock we're deep diving on today, but it's just a deep dive for an hour. I think you guys will enjoy it as well. All right. That's it, folks. Have a great day. And I'll see you later throughout the day. Thank you, everyone. Have a good day. Good night. Hope you have a very jammy day, folks. I'm sorry. Good night. Bye.